Welcome back to Crypto Meets AI. Jerry here with an update for you. Do me a favor, friends. Smash that like button, hit subscribe, and comment down below. Now let's get into this. Bank of America made it loud and clear. Bank of America says the entire U.S. banking sector will adopt crypto payments. And remember, they're one of Ripple's earliest banking partners. The writing isn't on the wall. It's glowing, my friends. XRP was built for this moment. And let's get an update from Jake Kleber on the XRP ETFs, expected filings, and supply levels.
I think all of you are going to be very surprised in the very near future about what XRP does now that we have the ETFs eating through the OTC desk and the dark pool volume. There's not a whole lot left over there. My guess was there was somewhere between 1 billion and maybe up to 2 billion available on the OTC and dark pools. They've already eaten through about 800 million XRP here in just the first week from that. So that's either half or almost all of what was available on the OTC desk in the dark pools. As soon as that is gone, and we're getting more ETFs, more spot ETFs for XRP are launching, and we still don't have the big dogs at the table yet. We still don't have BlackRock, and we still don't have Vanguard. We still don't have Fidelity. I think they're all coming to the table in the very near future with their spot ETFs for XRP. So that would put, if those three came online, we would have more spot ETFs than Bitcoin. And we, people are like, well, they're only going to buy off the OTC and dark pools, and we're never going to see price appreciation. Strap in because it's not going to last that much longer. We already saw some price movement today. You're going to see some crazy price movement when there's no more available supply through the OTC desk and the dark pools, and they have to go to the exchanges. We already saw a glimmer of this over there on Kraken last week, where we saw XRP at a high of $91, which registered. There's been lots of high prices in the past on BitTrue and Bitstamp and some of these other ones where people video it. But like you go back to look for it and it's not registered. This $91 registered on Kraken.com. So look out. I think a lot of people are going to be very surprised that a lot of what I've been talking about for the past 18 months is going to come to pass here.
Do you guys believe these so-called glitches are signaling what's going to happen in the future? And it was pretty interesting how he stated right there that all of those other glitches that happened never registered, but this one on Kraken actually registered, which I find very interesting myself. The BTC XRP decoupling. The day XRP breaks free from Bitcoin. A global liquidity shock is coming. Bitcoin will bleed with the market. XRP won't. XRP is preparing to break free, and the signs are already showing. Let me explain. Bitcoin still controls crypto, but only because the system is old. For 15 years, Bitcoin has acted as the liquidity anchor, the sentiment barometer, the market gravitational field. Rough numbers, 70 to 85% of all altcoin movements still correlate with Bitcoin. BTC down equals whole market down. BTC up equals liquidity flows to alts. Bitcoin's limitations are becoming impossible to ignore. Institutional settlement desks hate this number. 10 minutes per block confirmation. No native tokenization, no compliance layer, no integrated KYC rails, no real cross-border settlement capability. The data shows Bitcoin's dominance is artificially propped up. Several analytic firms show the same trend. Bitcoin dominance peaked at 72% in 2017. Today, it fluctuates around 50%. Long-term trend points to less than 40% by 2027. Why? Because the market is shifting from speculation to utility, tokenization, compliance, and settlement. This shift is where XRP lives. XRP is quietly positioning itself in places Bitcoin cannot enter. Here's what retail misses. Ripple is entering markets worth trillions. Treasury settlement, cross-border corporate finance, repo markets 4 trillion daily. Tokenized treasuries projected 5 trillion by 2030. Bank liquidity corridors. This isn't hype. This is where Ripple has actual pilot programs, patents, and partners. Meanwhile, Bitcoin is still fighting about ETFs and having narratives. The Bitcoin XRP decoupling begins when utility volume dwarfs speculative volume. Right now, Bitcoin's volume is 85 to 90% speculative, but XRP's institutional payment corridors have been growing. Ripple ODL volumes grow 400% year over year in some regions. Dozens of banks, APAC, MEA, EU, and Latin AM testing tokenized settlements. XRP liquidity hubs onboarding FIs quietly throughout 2024-2025. When utility volume surpasses speculative volume, XRP becomes immune to Bitcoin's mood swings. The deepest twist, institutions already treat XRP as separate from the crypto market. Crypto Twitter might not believe it, but bankers do. When banks model XRP, they don't compare it with Bitcoin at all. They compare it with Swift, Those are Vostro accounts, CLS, RTGS, Treasury FX swaps. XRP is being benchmarked against the global settlement system, not the crypto casino. This is why XRP's fate does not depend on Bitcoin's long-term outcome. XRPL's ecosystem isn't only building payments infrastructure. That's where systems like DNA on-chain emerge, a permission credential domain with ZK-proof privacy, allowing banks, funds, and sovereign players to operate on-chain without exposing sensitive data. The world still needs a trust, identity, and privacy layer for institutions to even use these rails. What the decoupling event will look like. Signs to watch. Bitcoin crashes, XRP holds steady or rises. Liquidity, XRP-led corridor spikes. Tokenized asset volume surpasses speculative altcoin flows. Banks announce accelerated blockchain settlement pilots. When that happens, the market narrative shifts from crypto moves with Bitcoin to utility assets follow their own fundamentals. That day is coming faster than most people realize. If XRP becomes a liquidity rail, the world still needs something even more important. And that's exactly what DNA Protocol incorporates in the XRP Ledger, a permission DEX plus zero-knowledge credential system that lets institutions interact on-chain without exposing sensitive data, solving the problems that stops banks, sovereign wealth funds, and asset managers from using public blockchain rails today. The more realistic decoupling scenario, the moment the old system breaks, likely triggered by rising bond yields, global liquidity shortages, Japan repatriating capital, new CBDC corridors, tokenized treasuries, hidden scale. XRP will respond to institutions, not Bitcoin. Bitcoin crashing while XRP rises will be the moment the world realizes this is the decoupling. When the dust settles, people will say it happened overnight, but the signs were always there. In Japan, in liquidity flows, in XRP rails, and in the new credential systems being built underneath. The reset has already begun, my friends. If you found this information valuable, please like, share, subscribe, and comment down below. John Agostino, Coinbase head of institutional strategy, on the Bitcoin 4-year cycle and how crypto is reacting to institutions embracing crypto. You know, if I like apples, I don't like them less because they're on sale, right?
I think this was Bernstein put this one out, that we see these sell-offs every 4 years, hence they happen.
So this is every 3 years. So we have a historical 4-year cycle, and we've seen down years in 14, 18, 22, followed by meaningful 2 to 3 year up year periods. So there's a bit of consternation in the Bitcoin community because, we'll see how the year ends, but this would be a 3 versus 4 year cycle. Man, I've been around long enough in these types of volatile assets to know as soon as you think you have it figured out, you don't. I always pull back to bare principles, basic principles. So why am I sleeping at night fairly well when my 8-year-old isn't coming in and punching me in the face? Nothing's really changed since the all-time high. If we just step back and think about structurally, in fact, you can argue the news coming out about Citibank, JP Morgan, both leveraging stablecoins at huge scale. The Czechoslovakian National Bank has come out and announced they will be the first Eurozone country to purchase Bitcoin for the Treasury. Clarifying rules from the IRS. Harvard Endowment announcing they own more Bitcoin than gold. All of those things are structurally very, very positive. From the exchange point of view, we're not seeing a massive increase in open interest in our futures market. CME, you can check it yourself. I was always taught early on, a declining price market accompanied by a rapidly declining open interest means the market is breaking down structurally. People are exiting the market forever. When I look at Bitcoin, I see the number of active Bitcoin wallets roughly the same as it was 3 months ago. I see both CME and Coinbase futures open interest, again, ticking down a little bit, but not nearly in line with price direction. And so I go back to the very, very basic principle of if I like apples, I don't like them less because they're on sale. And so if you like this asset, you like it more. If you don't like this asset, if you've never liked this asset, you now have the microphone for a few months or a few weeks, we'll see how long, and enjoy that moment.
If you're still thinking we're in a normal 4-year cycle, you're sadly mistaken. We are not. We are entering a different type of cycle. We are entering a different type of phase here. We are entering into a utility cycle driven by utility, tokenization, real-world assets, and mass adoption. So I would say this, if you hold any Bitcoin, be very careful and do not end up being the exit liquidity. Do not end up being the one that's stuck holding that bag, because if and when that bubble pops, the retail person will be the one that's screwed. It won't be these major institutions or these hedge funds. It'll be the common retail person left holding the bag. Well, that's what I have for you folks. Until next time. time, stay savvy, stay stacking, and I'll catch you in the next one. If you enjoyed this, smash that like button, hit subscribe, and comment down below. And if you want more crypto deep dives, check out our videos right here on Crypto Meets AI. Thank you for watching. Remember to always do your own research. This is not financial advice.